This is our Forex blog for December 7th, 2011. And like most days, we want to buy the strongest currencies versus the weakest and sell the weakest versus the strong. You can see each currency is compared against all the rest of them. And we have real-time statistical strength or weakness, daily, weekly, and monthly trend underneath that. Ideally, you want the real-time weakness to match the daily to match the weekly. Then, you have a much higher chance of catching a bigger pip move, especially if you combine that against a currency that's strong on both time frames. So last night from about 10:30 till about 4, the dollar was weak. And let's look at the Australian, and it was pretty much strong on all time frames. Let's look at the CAD. The CAD also has very strong daily, weekly, monthly trends. It wasn't quite, it didn't show the same strength that the Australian did. So clearly last night coming up to midnight, you would be looking to buy the strong Australian dollar versus the dollar. And as you can see on the chart, the price is above the hourly. That's one of our filters. Looking and comparing each of these currencies against each other, we can see that most of the momentum moves had intensity to the upside, but the pullbacks didn't. With the exception of right before midnight. This one goes back up to major resistance, the previous day's high, and then breaks out. It's also a narrow range pattern, which means trends are more likely to develop, and you draw your fibs on here, and that gives you a very high probability profit target. If you bought this breakout, which didn't really even happen until 1:25, so you had about 2 hours and 25 minutes really to stalk this trade. Patience is very key in trading. You would have bought it right around 0271 with a profit target of 89. That's 18 pips while risking 10, so that meets our minimum of 1.5 times likely bigger profit target than what our initial stop is. And keep in mind, as the market moves up, we move our stop up, and so very quickly it goes to break even. If it goes beyond that, the next profit target, which most of the time is the maximum high, is the 1.618 fib target, which is right around the whole number. Whole numbers tend to have major sell orders coming up to it from below. So, if you bought this around 72, you have a very good chance of making 28 pips on this while risking 10, and you can see that's exactly what happened. It came up and it shot right through the first fib target. So if it was me personally, I would have exited the whole trade here because it's not likely to get above that without kind of pulling back a little bit. If you had bought this pullback here, you can see it went up without the same momentum and therefore not likely to make a higher high. You really need levels of strength or weakness at and above the 80 level to push through previous swing highs and make higher highs or lower lows if you're selling. And so if you had bought this pullback later and the market started to go back up, but it did so without coming close to the 80 level, well, guess what? You want to move your stop up, and maybe you would have lost 5 pips on the second trade, but you would have quickly realized the trade wasn't likely to work. And that's why we use our statistical tools. If you're in a trade and it immediately jumps to plus 80 and above, then you're likely to make some good pips on it, or the worst case scenario, break even. The euro started to show quite a bit of weakness here at 4, and you have a confirmed weakness when the weekly trend is down, and even more so when you have intense weakness followed by just a very little amount of strength, and visually it's half of what the previous weakness is. It's pretty safe to assume the weakness will return if the weekly trend is down, and it also adds to your odds if the daily trend's down, but in this case it's just barely up. It's just the lightest green possible. So the weekly trend's down, the monthly trend's down. At 4 o'clock, after this little bit of counter trend move here, you're expecting the euro to continue down. Now, which currency do you want to trade it against? Well, coming up to 5, you can see that the dollar is very strong, and it pulls back with very little amount of weakness. However, the weekly trend's down, so it's not the best trend in the world, but you can use and ignore everything on the bottom, the daily, weekly, monthly trend, just by focusing on the previous momentum move. If you have a lot of momentum followed by very little weakness, on an intraday scalping basis, you can oftentimes pick up 10 to 30, sometimes even 50 pips, ignoring the daily, weekly, and monthly trends. Let's look at the euro-dollar chart and also combine that weak euro, strong dollar, And one of our filters is above the hourly, focus on buys, below the hourly, focus on sells. So at the time, it was actually above the hourly, and you're not really wanting to sell it up here. But the fact that it came down to the hourly, which oftentimes is support, and it was today, the fact that it didn't get a bounce up, and it also failed to go above the previous day's high. It also stalled right at my Fibonacci area. I do this each night, 30 to 45 minutes for my own trading. And it shows up on your charts as well. The fact that it ran out of steam there, pulled back, found support, and didn't bounce is very likely to fall when it breaks the hourly here. So, very high probability short right around 540. And if you used a range bar chart, here's what it looks like. This is a 6 pips per bar euro-dollar chart. And you can see it pulled back, and there's quite a bit of noise here. And you might have even got short a little bit earlier rather than waiting for the low. Using the range chart, we have a tool that's called Build Your Own Trend, which allows you to set this with whatever of our tools you want. We have multiple different trend candles, power index, 3x3 power index, 3-line break, 2 Fishers, an ADX trend, which is intermediate time frame intensity trend, and then the Momentum Pro. So I weight this myself with about 45-50% intensity tools. And so on the way down, it had a lot of intensity at the downside. It went up. It did not have that much strength. It's going sideways right there with just a little bit of weakness. And, there it goes. Here's your first profit target. And you also want to draw your fibs off of that wave. Most of the time, like I frequently say in class, the 1.618 is going to be your maximum target. So you probably wanted to exit your whole trade here at 73, short at 09, and you made close to 35 to 40 pips on that trade. But the currency meter helps you locate it, even quite a bit before it happened. A lot of weakness here, followed by a little bit of strength, and then a couple hours of weakness. And you can see the weekly, monthly trends down. At least with the dollar, when you spot this pattern, the monthly trend's slightly up. And you see the exact same pattern here with the yen. So the euro-yen also is a great currency to look to sell. Let me fast forward to today. This one came down and it broke the hourly right here, and it's kind of finding support. There's a 20-day moving average here, a monthly pivot level, or actually previous month's low. Major support. So I would really, in this case, wait for it to break underneath all this support. Your next profit target is down here, which is about 20 pips away. And you also have your Fibonacci profit targets off of this first wave. Again, most of the time, this is where your maximum profit is. The first one, came down with a lot of weakness, so you might have stuck with this. And then as it's kind of going sideways right here without that much weakness, I would have personally bailed just because there's a lot of support underneath there. You got the 10-day moving average, a monthly pivot level, the 1.618. In other words, you're not likely to make more than 10 additional pips. If you're in a trade in the next support level down where there's likely to be buying is 20, 30, 40 pips away, then you might want to exit half your trade if your gut instinct tells you to, based on trading experience, and hold the second half of your position, for the next support area. But if the next support area is just a few pips down, it's the same thing as you do before getting into a new trade. How many pips are you going to give back if you're wrong and it doesn't go to that level, versus how many pips will you make if it does go? If you're going to give back 10 pips to only make another 10 pips, then you might as well just exit here, especially if you got a nice 20 pip profit locked in. Don't be greedy. Greed is one of the killers of trading. Just take a lot of good trades. You're going to have losses. You're going to have a ton of break-evens. You're going to have some small and medium-sized wins, and maybe 10 to 15% of your trades will be nice 30 to 50 pip wins, and that's where your profit comes from. But you can also make a lot of 5 to 15 pip wins, have small 3 to 10 pip losses, a bunch of break-evens, and make money even on days when you don't have those huge trends which keep going and going. 1, maybe 2 days max out of a week, you will have those trends that just keep going and going and going. But most of the time, you got to take small to medium-sized wins and be happy with it. Let's look at the Australian here for the last example. very strong today on all time frames, and the euro was one of the weakest ones. So you could have also traded this if you have one of those brokers that has this pair, the euro Australian. Put that on layer 20. Weak euro, strong Australian. It's very likely to trend down. You can see this is the previous swing low. Coming up to, there was a brief amount of weakness from 4 to 5 and from 5:30 to 6:30. But whenever you see the majority of the momentum moves to the upside and it matches the daily, weekly, monthly trend, it's usually only a matter of time before the currency breaks down. So, after that 4 o'clock, you could have looked to sell here. As long as it doesn't go above this previous swing right here, it's in a downtrend. And if you got into that trade or even sold this level here, you want to draw your fibs on that wave to get an idea of where to get out at. And look, went right to the 1.382 fib target, and you would have been short somewhere around 55 out at 20. Or if you waited for it to break this low, and then it kind of went back above it and came down and went sideways right here, this is also a good place to go short. You have a very high probability of making 20 pips. Put your stop, a few pips above the high. You're risking 10 or 12 pips to make 20, and that meets our 1.5 to 1 risk versus reward ratio.